So many questions with insurance companies dropping fire coverage for thousands of people in California just a few months ago. How does something like that even happen?
Because they're for profit. And if they're not making a profit, they're going to leave the market. And that's exactly what they did. They were cherry picking the lines of insurance where they could make money, at like car and auto insurance, workers' compensation insurance. And they were not making money on fire. So they pulled out of that line of business because it wasn't profitable.
I don't even know how that's allowed. And the timing, of course, horrible for those people that are now uninsured. Is there any recourse for these families, for these homeowners?
So they're not all uninsured. Some of them were able to get into the FAIR program, which is the state of California's program that is higher cost and less coverage. But a lot of people were uninsured. As far as recourse, no, if you didn't have insurance, there's no one to go after to cover the cost of your house. And so sadly, there's a lot of people that have no recourse whatsoever. They're going to be looking to state funds. They're going to be looking to FEMA. They're going to be looking to nonprofits. But the cost to rebuild is going to be their expense.
And they lost everything. And on top of that, now they have to deal with insurance problems. California Insurance Commissioner Ricardo Lara has now temporarily halted insurance companies from canceling or not renewing policies for so many of the homeowners that were affected by the fires for 1 year from now. How big of a deal is that?
That's like calling the fire department after the house is already burned to the ground. It's too little, too late. He should have stepped in last year when they left in the first place. And instead, now he's doing this moratorium, which needs to happen. It's good that he's doing it. But even with this moratorium, there's still going to be people that are underinsured. So even if their insurer is not allowed to drop their policy, they're still probably not covering the full valuation of the house to rebuild it. Because when you go to rebuild your house, that when they look at the valuation, they look at it when you gave the valuation. So if you've done any remodeling since then, or say you got your insurance policy 10, 15 years ago, or your valuation was based on 10 or 15 years ago, but conditions have changed now. So the cost to rebuild now could be double or triple, especially in a place where everyone's rebuilding at the same time. And then there's also often limitations on, well, you have to rebuild within 2 years to be able to get your coverage. There's no one that is going to be rebuilding in 2 years in a community that the entire infrastructure burned down. So there's a whole bunch of issues here beyond just even the insurance policy being canceled. Even if you have insurance, there's so many issues, and this ripple effect is going to be felt throughout the state and throughout the country.
For years to come, it seems. Kea, for new home buyers or people that are thinking of moving to California, is it going to become much harder to get insurance?
Not just in California. This ripple is going to be felt everywhere because everything's interrelated. The hurricanes in Florida and people not getting insurance there, it's all impacted because these insurance companies are, even though they have different state regulations, they all work throughout the entire country. So the insurance is going to go up, not just in homeowner insurance policies, but it's also going to affect work comp policies for businesses. It's going to affect auto because it's like water balancing, right? So a for-profit insurance company needs to make money. So if they're losing money over here, they're going to find a way to make money somewhere because they still have to create, enough income for their shareholders.
You mentioned how many people are underinsured, that it's very common. What do we need to look at or look for in our insurance policies?
I'm going to caveat that by saying I'm a CEO of an insurance company and an attorney. And when this happened, we looked at our policy and we were underinsured. So everyone, this is my call to everybody. You probably aren't paying attention to this. We weren't. And everyone needs to call their agent. They need to look at their policy and see what their valuation is. They need to ask for guaranteed replacement cost, and they need to get the endorsements for when ordinances change. So, for example, you might have built your house, or your house was built 20 years ago, right? And then to build it today, there's completely new laws out. There's completely new ordinances. So if you don't have an endorsement in your policy that covers that change in the cost, that's going to be your cost. And then there's a whole bunch of other things that you need to ask for, like you need to make sure that your coverage covers the cost of your living expenses right after your loss.
Thanks for watching. Go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.